Joining us exclusively to talk about all this is CBRE CEO Bob Sulentic. Good to see you at Post 9. Stocks up a bunch. The results look better despite all the doom and gloom around your sector. What's actually happening?
Well, Sarah, I think some of the talk of the doom and gloom is out ahead of what's really going on. So office space is got a tough circumstance, partly because of return to the office challenges after COVID, partly because of jobs being eliminated in tech and other sectors. But if you look at industrial space, very strong fundamentals, 3.5% vacancy. If you look at institutional quality multifamily, less than 5% vacancy. Hotels, very strong fundamentals. Single family leasing backed by institutional quality financing, very strong fundamentals. Even retail fundamentals are improving. Rental rates are going up. So the story around commercial real estate isn't quite what people think. And then when you get to other parts of our business, like our outsourcing business, where we handle real estate for corporates, that's actually we plan to grow that at a double-digit rate this year, and that is a big business for us.
So office is, you just said, what, less than 20% of the U.S.
Well,
portfolio?
if you look at our U.S. capital markets business, it's less than 20%. And capital markets is where office is really creating challenges for us.
So what are you seeing there? How bad is it?
Well, you're seeing downward pressure on prices, not a lot of capital available to buy assets or finance assets. Yes, you're seeing some challenges in the banking sector associated with loans rolling over. But here's a statistic for you. About 1.5% of the balance sheet of commercial banks, 1.5% is in office assets. It's not going to be ruinous to the commercial banking sector.
Yeah, it's only $80 billion. It's a big number, $80 billion in refinancings for the year for office. But again, as a percent of the total, it's very small. That said, we all want to talk about it. I mean, and the Journal loves writing about it today. You know, there's this story about a building that was valued at $300 million a few years ago. It's going to sell for $60 million. You know, what are the long-term implications here of the significant decline in values of some of these properties in major cities?
David, there is going to be a decline in value for B and C office buildings. But what's going on with return to the office and challenges around return to the office is companies want their people back to a reasonable degree. And the way they're getting that done is to create great office environments for their people. So the good office buildings, the A office buildings, the ones that are surrounded by amenities with good infrastructure, those office buildings are still doing quite well. They're going to be valuable. And while the office asset class is going to shrink, it's still going to be a very large asset class.
You believe so. And what about this idea that seems to be very difficult to accomplish in terms of the requirement of so much new capital of converting buildings to residential, for example, given the need for housing in so many of these cities?
Well, there is a big need for housing here in the U.S. and around the world, and that's creating a real opportunity in commercial real estate. I think the opportunity to convert a lot of these office buildings is going to be limited because the floor plates and the building infrastructure doesn't really effectively work for multifamily residential.